Jerome Powell said what? Federal Reserve Chairman Jerome Powell said what about why the market's so high? Fed came out with an announcement. They gave us 3 indications of their thinking. I'm going to explain coming up. My name is Mike Bernard. I am the host of the Wise Money Show. I'm also one of the certified financial planners right here at Corhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Today is Friday, and earlier this week, the Fed made their statement, had their meeting, made their statement, and Jerome Powell, he's Santa Claus, as I've called him in the past. He's the hero of this Wall Street rally, but man, I just have my doubts about what he's saying, and I'm not a conspiracy theorist, and yet I just don't understand what's being communicated and what I'm seeing in the markets. And so let me explain. So the Fed came out this week after their meeting and said a few different things. Number one, they said they're keeping their interest rate low. You know, that's the big news. But that's almost old news right now because they said they're going to keep it low for 2 or 3 years. So who cares? Here's what they really, really said. Number one, that it looks as though the economic growth is slowing a little bit. Moderating, I think, is what they said. Okay, well, that's alarming. That's surprising. I haven't necessarily seen that. But, you know, we all live in our own little bubbles, and so we certainly haven't seen that on Wall Street. We have seen that with unemployment. We'll talk more about that in a video next week, but I can't necessarily say that I've seen the economy start to slow down. Could be. He could be absolutely right. The second thing, though, that he said is the Fed will continue their asset purchase program until there's substantially further progress than what we see right now. He said it's extremely premature, this is not a quote, extremely premature to be discussing an exit right now. So what that means is the Fed's going to continue to inject $120 billion into the economy. We are approaching a year with this. And at this pace, this is almost double what was done during the 2008 crisis per month. And that was the financial crisis, financial gridlock. We had the economy voluntarily shut down, not voluntary by any citizens, but voluntary by our government. And so, so they're just going to continue to create a lot of liquidity and pump more money into the system. I question the first comment that things are actually slowing. I do question the motives of the second one that, hey, we've got to see this thing happening or see the stability improve. We've got to, the economy, the economic recovery needs to be much further along than it is right now for us to slow down what we're doing. I question that as well. But the one that has me just shaking my head is there's lots of question about a bubble right now in the stock market and in asset prices. And Jerome Powell came out and said the Fed's monetary policy is not creating asset prices to go up, is not causing asset prices to go up. He said that the reason there's lots of speculation and the markets are higher and asset prices are going up is because of the vaccine and because of the belief that we're going to have an economic recovery on the other side of this. He also said fiscal policy, so government stimulus. He acknowledged that. But he said, basically defended, or not defended his position, but basically rejected the idea that Fed monetary policy is creating lots of speculation and pushing up the stock market prices. What? Like that statement alone makes me doubt even more his other statements. That makes me question his credibility, because if you were to look at the charts, I'm not going to throw them up here now, but you would see the speculation was significant in the markets well before. Well, like that speculation was significant in the market back when then President Trump was saying we'll have a vaccine this year, and everyone said there's no way that will happen. So we had crazy speculation at that point when no one believed there was going to be a vaccine this year. And now we've got one. And yes, from that point and on, since the election and on, markets have continued to soar. Small caps had their best month ever. And emerging markets started recovering significantly. I know, but things were overheated by no stretch of the imagination before that. So here's my curiosity. The Fed chairman, Jerome Powell, say that because he wants investors in the markets to believe that what the Fed is doing isn't necessary for the market. And if that's his positioning, okay, I'm okay with you trying to help with that, because I absolutely think that's what's happening. And I fear that, just like many other investors, that if and when the Fed ever decides to start slowing or tapering or indicating that they're going to reverse course, the markets will not like it. And so for the Fed to come out and say, nah, it's not us, to me, they lose credibility. I hope their intention is just to say, we're not that important in this whole scheme. But we know that they are. The election didn't matter much. The vaccine didn't matter much. The economic recovery didn't matter much. I mean, all of those things do matter. But the Fed and the amount of liquidity they are pumping into the system, that's what matters most. And when that starts to change, I think that will be Wall Street will react significantly. So what should you do? We have no idea when they're going to change. In fact, there's some belief out there they'll never change. I think that might be true. The Fed might be in capital markets forever, and the game may have changed. Time will tell. We'll see how this ages. But what should you do as an investor? I mean, if this is the case, and the Fed has put in a floor and a backstop, and rampant risk-taking is going to ensue, you can't sit on the sidelines. You've got to be participating if markets and assets are going up. You've got to own assets. That includes stock, real estate if you can, right? So you've got to own them. But a phrase that I would tell you, and we've said around here, is stand as close to the exit as you are to the entrance. Make sure that you're able to pivot, not based on your emotion, because my emotion already is saying, yeah, we haven't had a significant pullback in a while. That seems overdue. That's my emotion. I could be totally wrong. Use a system, an unemotional system that can help you pivot. So to us, I say this almost every video, or certainly every video where I'm talking about investing philosophy as opposed to just pure financial planning strategy. And that is, you've got to have your overall investment structured for your financial plan. I've got a meeting with some folks today who are retired. They're in their mid-70s. We've got about 30-40% in stocks. Okay, so this wild rising stock market shouldn't mean that we overextend ourselves and get more in stocks than we should. However, that 30-40% in stocks, a lot of that is in our momentum strategy. So when things cool off, that can pivot to safety if it needs to, which is consistent with where they're at in their life. And so make sure that you're using that type of approach, because as long as the Fed is involved, and they could be for a long time, the market likes it. But if they ever start tapering or start slowing or change their tune, I do think the market is heavily dependent on the Fed support right now. And the last time, since 2008, we saw that happen all the way until now. And the time when the Fed tried to back out is a time we saw the stock market drop almost 20% in just a couple of weeks. And so just make sure your investment strategy is connected to your financial plan and you're using a diversified approach, a momentum type strategy. So if you've got a CFP that's offering that, work with them, make sure that they're helping you there. If you don't and you'd like to talk to one of my CFPs, you can give us a call, 574-247-5898. Find us online, korhorn.com, that's Korhorn with a K, or wisemoneyshow.com. All right, there you have it. Go out and take your next wise step in your financial life.